Audit Framework and Regulation. Assurance. Elements of assurance. Levels and types of assurance. External audits. Reviews. The framework for assurance is enumerated as: what is assurance? Assurance engagement is an engagement in which a practitioner obtains sufficient appropriate evidence in order to express a conclusion designed to enhance the confidence of the intended users, other than the responsible party, about the outcome of the evaluation or measurement of a subject matter against a criterion. It is often possible to check things for yourself, whether quality, accuracy, performance, or existence. You might not have the skills or the time, or you might be in the wrong location. Therefore, you must rely on someone else to give you assurance. This means you have to decide. Number 1. What standards must be applied? Number 2. What represents good, acceptable, or unacceptable? Number 3. How much checking should be done? Cause all checking and assurance has a cost associated with it. Elements of assurance engagement. There are 5 elements. Number 1. Three-party involvement. Practitioner. The reviewer of the subject matter who provides assurance. Intended users. The people using the subject matter who then have to take economic decisions. Responsible party. The party responsible for preparing the subject matter. Number 2. Appropriate subject matter. The information that is subject to examination by the practitioner. Number 3. Suitable criteria. The criteria against which the subject matter is evaluated, that is, standards, principles, guidelines, laws and regulations. Number 4. Sufficient appropriate evidence. Sufficient evidence is necessary to provide a basis for the opinion or conclusion. Number 5. Written assurance report. An appropriately written assurance report serves as an output of assurance engagement expressing a conclusion or opinion on the subject matter. Element. Number 1. Three-party involvement. In relation to an audit, practitioner is an auditor. Intended user is the shareholder. Responsible party is the director. In relation to a forecast, practitioner is an assurance provider. Intended user is the director or provider of finance. Responsible party is the director. Number 2. Appropriate subject matter. In relation to an audit or the financial statements. In relation to a forecast is the forecast. Number 3. Suitable criteria. In relation to an audit is the financial reporting framework. In relation to a forecast is the appropriate assumption and the financial reporting framework. Number 4. Sufficient appropriate evidence. In relation to an audit is obtained by performing audit procedures such as tests of control, tests of detail, and analytical procedures. In relation to a forecast is obtained by performing examination procedures such as inspection of documents, inquiries, and analytical procedures. Number 5. written assurance report in an appropriate form. In relation to an audit, is the independent auditor's report providing an opinion as to whether the financial statements give a true and fair view. In relation to a forecast, it is the independent assurance report providing a conclusion on whether anything has come to the practitioner's attention that the assumptions are not a reasonable basis to the forecast, and also an opinion on whether the forecast has been prepared on the basis of the said assumptions. Here are certain examples of assurance engagements. Audit of financial statements, review of financial statements, systems reliability reports, verification of social and environmental information, review of internal controls, value for money audits in public sector organizations. General principles and assurance provider must follow when performing such engagements. Comply with ethical requirements. Apply professional skepticism and judgment. Perform acceptance and continuance procedures to ensure only work of acceptable risk is accepted. General principles the assurance provider must follow when performing such engagements continued. Plan and perform the engagement effectively. Obtain sufficient appropriate evidence. Consider the effect of subsequent events on the subject matter. Document the evidence to provide a record of the basis for the assurance report. Agree the terms of engagement. Comply with quality control requirements. Form a conclusion expressing either reasonable or limited assurance as appropriate. Types of assurance engagements. There are two types of assurance engagements. Number 1. Reasonable assurance engagements. Here, the practitioner gathers sufficient appropriate evidence that is necessary to be able to draw reasonable conclusions, performs very thorough procedures to obtain sufficient appropriate evidence, including tests of controls and substantive procedures, and also concludes that the subject matter conforms in all material respects with identified suitable criteria. Gives a positively worded assurance opinion and a high level of assurance confidence. The confidence inspired by a reasonable assurance report is designed to be greater than that inspired by a limited assurance report. Therefore, there are more regulations or standards governing a reasonable assurance assignment. The procedures carried out in a reasonable assurance assignment will be more thorough. The evidence gathered will need to be of a higher quality. For example, a reasonable assurance can be as such. In our opinion, the financial statements give a true and fair view of, or present fairly in all material respects, the financial position of Murray Company as at December 31st, 2014. And of its financial performance and its cash flows for the year then ended in accordance with international financial reporting standards. Number 2. Limited assurance engagements. Here the practitioner gathers sufficient appropriate evidence to be able to draw limited conclusions, performs significantly fewer procedures, mainly inquiries and analytical procedures, and also concludes that the subject matter, with respect to identified suitable criteria, is plausible in the circumstances. gives a negatively worded assurance conclusion and also gives a moderate or lower level of assurance than that of an audit. For example, limited assurance can be given as such. Nothing has come to our attention that causes us to believe that the financial statements of Murray Company as of 31st December 2014 are not prepared, in all material respects, in accordance with an applicable financial reporting framework.